To look at your money. First, let's take a look at how the stock market is doing. At the end of last week's trading, the S&P 500 down 2.4%, NASDAQ down 3.2%, and the Dow Jones Industrial Average down 1.6%. For nearly 2 years, investors have been patiently waiting for the stock market to return to the all-time highs that were set back in early January 2022. Along the way, it's been a bumpy ride, and a rise in last week was yet another example. For the week, the S&P 500 fell 2.4%, the NASDAQ lost 3.2%, while the Dow Jones Industrial Average declined by 1.6%. The S&P 500 and NASDAQ fell to their lowest level in nearly 5 months. And to talk more about this, joining us now is our financial expert, Mark Grywacheski from the Quad Cities Investment Group. Good morning.
Morning. Good to see you again. Happy Monday.
Yeah, so to what extent was last week's decline in the stock market caused by the ongoing war in Israel?
Well, quickly, looking at some of the pre-market indicators here, all three are set to open up significantly lower yet again. The NASDAQ, S&P 500, Dow Jones Industrial Average currently trading down about 200 points. Now, we'll see how things pan out over the next couple of hours, Devin, but it certainly looks like, based on the pre-market indicators here, that we're in for another rough day in the market. But kind of back to your question, even though the Israeli-Gaza war is in a very fluid situation, last week's sell-off was again once about inflation. Both retail sales and industrial production data came in much stronger than expected. Yet another reaffirmation that high inflation is still very, very much a problem. Last week we kind of spoke about this new term, Devin. You remember, higher for longer, increasingly being used on Wall Street, and higher for longer inflation means the Federal Reserve will have to keep interest rates higher for longer as it tries to get this inflation under control. Wall Street wants this inflation problem to end once and for all. For nearly 2 years, the stock market has been, kind of struggling to get back to those all-time highs that were set back in January 2022. And Wall Street wants to be able to drive the stock market, back up to and eventually through those all-time highs. But this inflation problem is preventing Wall Street from doing that. And until Wall Street gets some level of comfort that this inflation is finally under control, in my opinion, we're going to continue to see these large up and down swings in the stock market, unfortunately.
And in what ways might the Israel-Hamas war start to impact the stock market and investors?
Well, so far, Devin, and that's kind of the main caveat there. So far, we really haven't seen much impact from the war on either the U.S. or the global economies or stock markets. Israel, the Gaza Strip, and those border nations, within that war have, very small economies and aren't those major global producers of commodity. The concern, though, Devin, is if this isolated war becomes a contagion and spreads out across the broader Middle East and starts to impact those main crude oil producers like Saudi Arabia. One of the things worth monitoring, though, Devin, is the price of crude oil. In the last 10 days, the price for a barrel of crude oil has risen about 10% from $82 and briefly went over $90 on Friday. But if this war does start to, become a contagion and spread out across the Middle East, and the price for a barrel of crude oil goes from, 90 to 100 to 110 or even 120 dollars a barrel, that will start to significantly impact the U.S. and global economy, and unfortunately, that could potentially send stock prices a lot lower.
So if oil prices continue to rise higher, what are some of the ways we'll start to feel the impact?
The initial impact would most likely be felt in higher gasoline prices. That's, usually how, as we say, kind of the tip of the spear when it comes to rising crude oil prices. But then there's the impact of higher costs to heat your home this winter. For businesses, higher crude oil prices translates to higher costs of manufacturing and transportation, warehousing, and general operating costs. And ultimately, all of those higher costs get passed on to the consumer in the form of higher retail prices. And that's the significant risk there, Devin, that's really concerns Wall Street. Higher crude oil prices could mean our current inflation problem could quickly become much, much worse.
All right. Thank you for breaking this down for us, Mark, and we'll see you next Monday.
Okay. Enjoy the rest of your day and the rest of your week. Take care.
You too. Thank you. And let's